Okay, good morning, good afternoon, everyone. Thank you very much for taking some time out of your day to join us for this webinar. Very excited to announce today the launch of our brand new product. As many of you know, Binary Stream has been doing the GP thing for nearly 2 decades. We've been a gold certified ISV for many of those years, but we are looking to the future and we've made some expansions into the AX/Dynamics 365 for Operations product set. Last year, we initially released our deferrals module for the product, which handles revenue and expense deferrals, but it was kind of incomplete. We had one side of the coin, half the package. What we're announcing today is the launch of our subscription billing suite, which really provides a unified system for people to manage their contracts, bill them, and then of course do the recognition on the back end. So a couple of quick housekeeping notes for today's call. We are going to have all attendees in listen-only mode just to avoid any background noise and deliver the best possible audio. That being said, we do want it to be as interactive as possible. So if you have questions, we are going to be doing a Q&A/chat at the end, but you don't need to wait until then. So if there's questions that come up during the presentation, please feel free to either put your hand up or use the chat or Q&A functions. You'll find those on the right hand of your screen under the GoToWebinar panel. Okay, so for today, our presenter is Neil MacDonald. Neil's been a solutions consultant with Binary Stream. He's been a solutions consultant at Binary Stream for a number of years now. He is a technical product expert as far as our billing and deferrals module go, and he has a lot of accounting background as well. So one of Neil's great qualities is he's able to take some complex financial material and make it easily digestible for folks. So if you like what you see today and you want to learn more, and especially if any of your customers might be good candidates for the subscription billing suite for AX, please let me know, let your account manager know. We'd be glad to set up a one-on-one discovery call and subsequent demo. Neil, I'll turn it over to you. Please take it away.
Okay, thank you, Brian. So what we want to do today is kind of look at, initially we'll start with our agenda. Why are we here? Why is everybody on the call today? So Brian's already handled the introduction, and again, I appreciate that, Brian. I appreciate everybody joining the call today. What we want to talk about initially, I'm going to talk about the different modules and some of the features of the subscription billing product for Dynamics 365 operations, or it also works with AX if you're still in the latest versions of the AX product. Going to look at some scenarios. How does the system work? What kind of complex billing scenarios might you run into that we can handle? Now, obviously, in the short demonstration we're going to have today, we can't cover absolutely everything. I'm going to very quickly hit some highlights of the product, and I'm going to show some actual scenarios and product demos as well. I'm going to talk about some of the reports that are available as part of the subscription billing for D365 as well, and then talk about some of the future enhancements. While, as Brian says, we're introducing some new features today, we're not done. The product has some ways to go. We've got some more features based on feedback from some of our customers, and based on what we've learned in the subscription billing space on the Dynamics GP side, we're bringing a lot of those rich features into the subscription billing for Dynamics 365 operations. Basically, the product, this billing suite, is designed to help you with any complex billing and deferral issues, as well as simplify the compliance with the new ASC 606, which is entitled Revenue from Contracts with Customers. For those of you who are in the billing and the revenue recognition business, you probably recognize ASC 606 as a brand new accounting standard that's coming into effect very, very quickly. We're just a few months away. And people are now starting to look at, hey, you know, what do I need to do to be fully compliant? And what we're finding is a lot of our customers, a lot of the people that we're talking to are preparing for ASC 606 compliance by building complex, massive Excel spreadsheets where they can track and reevaluate the revenue and reallocate it and then bring it back in through journal entries. Our goal is to enable your business by freeing up your time. Let's get rid of those spreadsheets. Let's do everything inside of your ERP and also streamline your entire quote to cash process. So what are some of the modules and features of our subscription billing? There's actually 3 major components. Now these pieces will work independently of each other, but they're also designed to work very closely together. And I'm going to show you an example of the three of them together and then kind of pull them apart a little bit. So the first piece is our advanced revenue and expense deferrals. It allows us to defer revenue either based on straight line. So for example, a $1,200 contract over 12 months divided by 12, spread it out. Now we can do that an equal amount per period, or even based on a per diem amount, where February we get less recognition than a month with 30 days, for example, June, which will get less than a 31-day month like July. Either way, it's still straight line, spread out over the calendar. We can also do it based on events. So I'm going to recognize revenue when a certain thing happens. Now, if you think of the way ASC 606 is written, you have to figure out what are my performance obligations and have I fulfilled them. When that is fulfilled, you may be able to recognize revenue at that point in time. Again, ASC 606 says either at a point in time or over time. So what if that point in time is some unknown date in the future? You don't know when you're going to fulfill that performance obligation. What if the contract with your customer says that you have fulfilled it based on percentage of completion? How do you do that inside of your ERP? The answer, quite simply, is without a product like this, you don't. You do it in Excel, you manage it there, and journal entry it back in. If you only got 2 or 3, that's great, but if you've got many customers, many contracts, that can be very time consuming. We also have the ability to reallocate the revenue on sales orders or on the billing schedules and contracts under the advanced recurring contract billing portion using our multi-element revenue allocation. Now, why would I have to do that? Again, think of the way the ASC 606 is written. One of those 5 steps is that I have to, after I know my performance obligations, determine my transaction price, then I have to allocate the revenue based on the standalone selling prices of those performance obligations. Again, how do I do that inside of my ERP? Quite simply, you don't without a product like ours to do that. You'd have to do it in Excel, manually do that calculation, and journal entry it back in. Part of deferrals is not just a matter of getting the information into your system, but as accountants, we like to get information back out. Every accountant wants to see a deferral balance. What is left on my balance sheet? How is that going to flow from the balance sheet to the P&L, the waterfall report? If I do my deferrals properly, what is my balance sheet going to look like in the deferral account over time? That's the declining balance report. I'm going to show you all 3 of those. We also have the ability, if you have a front-end system, a CRM, Salesforce, something like that out there, it's another system that your sales guys are using to build your contracts, and you're using it to create those deferrals or to create your invoices. We have created the data management imports inside of AX or Dynamics 365 to import all of that in and trigger all of our deferral logic. There's also the advanced recurring contract billing. I touched on that briefly earlier. It allows us to create billing parameters at the line level. So I could have on a single contract something that is a one-time billed item. I could have something that bills monthly, something else that bills annually, and then my deferrals product kicks in and says, I'm going to bill it annually, but defer it monthly or based on events or milestones over X period of time. We can also do usage-based billing, and this is based on either consumption or metered. What is the difference there? The metered, think of the power meters or the water meters on the sides of our homes or businesses. Somebody comes around and looks at the meter. A lot of it's done electronically now, and it just flows through the ether and it goes to the power company. But they're going to take a meter reading today, compare it to the meter reading this time last month, store those 2 values, calculate the difference, and bill you for the difference. And this carries on month over month, and they continue to store those meter readings. Consumption is more like our cell phones. We all have a plan on our cell phones where we get a certain number of minutes. Maybe we even have some minutes free. But let's say we're billed based on the number of minutes. So you start your billing period at 0. Every time you make a phone call, receive a phone call, send a text, the phone company tracks that. And they're counting the number of minutes or the number of calls, whatever the criteria is. And at the end of your billing period, they go and say, hey, you know, you used 85 minutes. I'm going to bill you for 85. It's based on what you've consumed. Then they start you back at 0 and continue to count again for the next period, kind of like zero-based billing. So in the advanced recurring contract billing, we can do either of those, based on consumption, based on a stored meter reading. From a reporting standpoint, we have a very important report for accountants, the MRR, or monthly recurring revenue report. We also have line detail inquiries, so we can go in and say, you know, how many dollars are we going to bill next month, next year, the next 5 years for a particular item, or on a particular contract, or on a particular group of items. We can go in and do those inquiries very quickly, slicing and dicing that data that's stored in our tables. We can create price increases or decreases, escalations or discounts based on an amount, based on a percentage, based on a CPI with an effective date. So if you have a customer say, you know, you've been a loyal customer, after 3 years, I'm going to give you a 2% discount. You know, you simply put in a -2% and the system calculates it automatically. You can say, you know, that discount only applies for a certain period of time. Maybe your contract with the customer says, I'm going to charge you X dollars today, and every year your price will increase by 1.5% or by a flat amount. Again, we can do increases or decreases, amount, percentage, or CPI, or even a combination thereof, CPI plus 2%, for example. And again, we have that data management import that allows us to import and create the billing schedules, the individual lines on the schedule, and even import that usage or those meter readings or the amount consumed. The multi-element revenue allocation module is the one that allows us to reallocate the revenue on a contract that has multiple performance obligations. So let's think of an example of where these modules might be used, and then we'll jump into Dynamics 365 and have a look. Here's an example. I have an order from a customer, and they're ordering some hardware, and I'm going to sell it to them for $1,550. But my standalone selling price, again, we're looking at being ASC 606 compliant, so I have to figure out what's my standalone selling price. It's $1,700. This is a one-time item. It's billed once. It's not deferred. When that hardware is delivered, the customer's happy. I fulfilled that performance obligation. I can recognize the revenue. There's also software. It's going to be $300, billed monthly because it's a SaaS or a software as a service offering. But normally, I would sell that as a standalone item for $400 a month. My sales guy has given them a discount. I've got a setup fee. It's $1,000, and you know, there's no discount there. The standalone selling price is the $1,000. I'm going to bill that one time, but in order to be GAAP compliant, that setup fee has to be deferred over the life of the initial contract or deferred for 12 months. I also have some consultation fees, $1,750. Again, there's no discount there, but I'm going to recognize that revenue based on percentage of completion. So as I complete a portion of this, I'm going to recognize that revenue. So it sounds like a pretty simple contract, but there's some issues. How do I create a billing schedule inside of my ERP with each of those lines having different billing parameters, different deferral parameters? I need to be ASC 606 compliant. I'm looking at this list and I know my sales price, I know my standalone selling price. Where do I put those inside of the ERP? Where do I store the standalone selling price? And then how do I trigger a reallocation of the revenue based on those standalone selling prices in order for me to be ASC 606 compliant? And then I've got deferrals, some straight line, some based on percentage of completion. It could be other events or other milestones. Again, how do I handle and manage all of this inside of Dynamics 365 for Operations or Dynamics AX? Let's go have a look. So here we are in the latest version of Dynamics 365 for Operations. As you can see, it is a web-based application. And I'm going to jump right in. I'm going to show you the solution first. Then we'll come back and we'll talk about how do we manage this? Where do we store those standalone selling prices? How do we manage those deferrals? Let's look at the solution first. I'm going to jump right into my advanced recurring contract billing, and I'm going to go up and open up the billing schedules. And it was schedule number USMF 00038. That's the one that was at the top of that PowerPoint slide. Let's jump in there. And as you can see, I'm inside my Dynamics 365 for operations. This is the advanced recurring contract module of the subscription billing suite from Binary Stream. So everything, of course, at the top of the page here is the header. I'm going to start by filling out the header. We have auto numbering for the schedule. I'm going to select my customer. It's going to bring in all the customer's details. That's standard AX or D365 functionality. Notice I can select my billing frequency. What I'm going to select here is the one that I would use most often, or that's going to apply to the line items. I can have it default in there to something, but notice when we start adding the lines, just to glance down quickly, my lines have different billing frequencies than I have at the header. We're allowed to manage that at the individual line level. I'm going to put in my billing start date and my billing end date. Alternatively, I could simply put in my start date and the number of billing periods. So if I'm saying, you know, I'm going to bill starting today, billing frequency is monthly for 16 months, I just type in 16, it will calculate the end date. Do I want this schedule to auto renew? And I can turn that on or off, yes or no. So I have an auto renew functionality. When we do the auto renewal, it's going to renew based on the original billing frequency. How many lines do we want to add to the renewal? And again, I'm setting this at the header level. We can manipulate it at the individual line level as well. Let's go down and look at some of the lines. I'm going to bring in my items, my hardware, my software, my setup fee, my initial consultation. Notice as we go through, the system automatically knows some of these items are deferred. Well, how does it know that? That's part of the advanced revenue and expense deferrals module. We'll talk about that in a moment. We can also come in and say, you know, there's our unit price. This matches the contract that we have with the customer, and it carries on and it shows me the entire billing schedule, and I can scroll across and I can see all the details. Now, some of these lines are showing as terminated. That's because I've already created the invoice. Nobody wants to sit here on a demo and watch me run invoices. I've already done that. So that's why I can jump in, I can show you the results. Now, a couple things we want to look at. What's going to happen with the revenue allocation? Again, remember this item is $1,550, but it's got a standalone selling price of $1,700 and so on. The prices are different than their standalone selling prices. If I come up here to the very top under revenue allocation and look in the revenue allocation item here, it opens up another window that says, here's those items. It knows the billing frequency, so it knows what the contract value is. Remember that software was selling for $300, but it's 12 months, therefore it has a contract value of the full $3,600. It carries across and says, what is the origin of the standalone selling price? We're going to come back to the setup to where this is going to make a little more sense. Bottom line, it brings in the standalone selling price. Based on that, it says I have to reallocate the revenue. So that item I'm selling for $1,550 that has a standalone selling price of $1,700 receives revenue of $1,451.89. Now, if you've been following ASC 606, basically what happens, the way this calculation is done, is we take the standalone selling price of an individual item, we divide it by the sum of all of the standalone selling prices, then we multiply it by the contract value or the total here, and it says, great, there's the amount that we should be recognizing for that particular item. We do an entire session on ASC 606. If you're not familiar with it, contact our marketing department, or you can go to our website and download our ASC 606 webinar, and those formulas are explained. Bottom line is, it's done automatically for you inside of D365 or AX. You don't have to do any heavy lifting here. Now, a couple pieces to note. Notice that setup fee, $854.05. The initial consultation, $94.60. That is the amount that we should be recognizing and hence deferring. Let's make sure that's indeed what happened. If we come back in, we can see that these items are in fact deferred. We've run the invoices. before we go jump at and look at the actual invoice or the deferral schedules, let's click on the advanced deferrals button here and see what's going to happen. For my setup fee, the system says, hey, you know, I know this is a deferred item. I know my deferral account number. I know my recognition account. So that's my balance sheet and my P&L accounts. It knows to build it based over the deferral schedule based over 1 year. It knows when to start and when to end. Notice I can do it either straight line or event-based. This one is straight line. I have the ability to do equal per period. If I turn this off, I get per diem recognition. As I mentioned, February we get 28 or 29 days depending on the year. Months with 30 days get a little more recognition. Months with 31 get a little more. Okay, I can't preview it from here. I've already run the invoice, but we'll go look at those schedules in a minute. The other one is this consultation fee, and I'm going to recognize that based on an event-based, a percentage of completion template. Notice we have that here. And I've got some milestones built where I can add that percentage of completion later. Now, we've run the invoice based on the way that this is set up. Let's go back in and we're going to look at a couple things here. If I go back to my advanced revenue expense deferrals module and pick up the deferral schedules, I want to check the last two deferral schedules here. There's my setup fee. Notice the amount that's being recognized is in fact the $854.05. It is that reallocated amount. And if I drill in, it shows me the schedule where it's recognizing $71.17 each and every month, starting in July, going all the way out till June of the following year. So in standard AX, without this functionality, you've got a couple problems. You would have to build that invoice, that initial contract, go outside to Excel to recalculate the revenue. Then you would have to manually create the deferral schedule again in Excel, and each month bring back in that $71.17 of recognition, move that from the balance sheet to the P&L by journal entry. Because we're doing all of this inside of the ERP, AX/D365, you don't have to worry about those Excel spreadsheets. We're doing it for you. We're building out the schedule so you can forecast. You can look at our tables, build your own reports, look at some of our inquiries and say, you know, what am I going to recognize next month, next quarter, the next half, the next year, the next 5 years? If you've got a 99-year deferral, we can show you what that revenue recognition looks like, what that waterfall looks like, what the deferral balance looks like for the 99 years of that contract. Okay, I'm going to go back and I want to show you the initial consultation. Again, notice it's not doing the full amount. It's based on that reallocated revenue, $14.94 and change. And if we drill in, I've got my 3 milestones. Now notice these don't have dates on them. They don't have amounts or percentages because I don't know yet when that's going to happen. It's based on percentage of completion. I don't know, am I going to do it next week, next month? And when my project manager, my consultant comes back and says, hey, you know, we've met milestone A, well, what percentage of completion are we at? I may not know that up front. So all I have to do is open this thing up, come up to modify schedule, and I can come in and I can key in a date. So let's say that today, and today is the 16th, I believe, of August, and I'm going to come in and say, you know, I'm sitting now at 42.5%, and the system will automatically know what amount to use. When I click OK, it says, great, there's our date. We're going to recognize $635.21. Now, when I run my journal entries for the month of August, it will pick that up and automatically post it. How do I run those journal entries? How do I recognize my revenue? If I come back out to my advanced revenue expense deferrals module, I simply come into recognition processing, and I tell the system what I want to recognize. So I'm going to create my journal entries. Normally I would do these at the end of the month, so I'm going to cut it off at the end of the month, and I'm going to say, you know, my recognition is for, I'm just going to say for the month of August, and I'm going to book that on the 31st. I select, it will go out now and find anything in the database that needs to be recognized. So again, I'm not out there manipulating Excel spreadsheets. I'm not recalculating formulas. I don't have to manually create journal entries to make this happen. It will come back in and it will do this automatically on its own. and it says here's all the items that need to be recognized. And notice here, number 28, there's that $635.21. It's ready to pick that up. And there's the $71.17 from the other line item. Of course, I've got other schedules in my system here already. At this point, all I need to do is click the batch and it will run those journal entries. I'm not going to do that just for the sake of time, but that's how easy it is to create the journal entries. Now, we want to look at how do we make all this happen? We saw that billing schedule. It came in with standalone selling prices. It knew that certain items were deferred and certain items were not. Let's look at the setup. That's usually the boring part of a demo, but that's really the magic that makes everything else happen. Let's start with the standalone selling prices. If we come down to our multiple element revenue allocation, this is a very, very simple module, but it does a lot. We're going to come in here and tell it that we have some basic parameters that we want to follow. Do we want our default SSP or standalone selling price origin to be the selling price, the sales price of the item? See, I can use the sales price of the item and simply assign a sales price in behind that item. And then if my sales guy goes and negotiates any other price, higher or lower, it will automatically go back to the master record and say, that sales price, the one that's keyed into the system, the one that's set on that item, that's the one that I'm going to use to determine the reallocation of the revenue. Maybe it's the price on the invoice. You may have an item where you tell your sales guys, you cannot change this. My setup fee was a good example. That setup fee is $1,000. I don't care what else the customer buys, you cannot change that price. Therefore, you can use the invoice price because that would be the standalone selling price. Maybe it's an amount that you want to store in the system somewhere. You don't want it to be the sales price. You don't want it to be the invoice. You need a different place to store that. So we're simply going to tell the system how it works. If when we do that allocation, that reallocation of revenue, there are any rounding differences, and sometimes that could happen, where do you want us to store those extra pennies or fractions of pennies? We simply put an account in here. The other piece we need to look at is where we're actually storing and saving the standalone selling prices. So for example, here's a bunch of different items. It shows what the actual item is, and I can see the various origins. If it's an amount, I'm going to store that standalone selling price right here in this module. If it's the base selling price, nothing shows up here because it knows to go back and check the master record. If I were to drill into this item, I would find this one has a base selling price of a certain amount. That's what's going to be used. And if I go all the way down, I'm going to find, for example, there's the consultation. It's based on the invoice price. My setup fee was based on the invoice price. So this is where the standalone selling prices are stored. It's literally that easy to set up the module. Select my items, select the origin or the source of that standalone selling price. If it's somewhere other than the base sales price or the invoice, then key it in here and we store it. Okay, what about those items that were deferred? Let's go to our advanced revenue expense deferrals. If we go down to the setup, there's some basic parameters we can set up here. We can come in and we can say the basic setup parameters are things like the equal per period versus the per diem. Turn that on or off. If I'm starting a contract, right, I'm invoicing something today, but the service actually started 2 or 3 months ago, do I want the system to do a catch-up journal entry, right? So my initial deferral would be for, let's say the thing started the 1st of June. Do I want a separate journal entry for June, a separate for July, and a separate one for August? Or do I want the one I run for August to consolidate that up and simply do a catch-up? Because I already closed June and July. I don't want to go back and play with those. Again, it's just a switch. You decide how you want that to work. Do you want the deferral to start based on the transaction date, the date of the contract, the date of the invoice? Do you want it to start at the beginning of this month? Do you want it to start at the beginning of next month? Or based on the rule of 15s? What the rule of 15 says is if my transaction date is between the 1st and the 15th, start the 1st of this month. If my transaction date is between the 16th and the end of the month, whatever day that happens to be, then start the 1st of next month. Again, your choice. The system is designed to be flexible. Do we want to automatically post the journal entries, or do you want them to sit in that batch that you can validate so that somebody can run the batch and somebody else goes in and validates and makes sure that everything is correct before it's actually posted. Again, your choice. And if we're running our journal entries, when we ran that list of journal entries, there was maybe 20, 30 lines. Not a big deal, but what if I've got 20 or 30,000? We can have the system create a single journal entry where it rolls up the amount in the deferral account, it rolls up the amount in the recognition account, and it creates a single journal entry. Or it could create a separate journal entry for each of those lines, entirely up to you.
Neil?
Yes.
Now that we're at the halfway part, I just wanted to jump in and summarize one of the questions. There's a couple that have already been answered just concerning when things are deferred or not. But one question from Alex, with the taxes, can you clarify and or show how does that work? Do they get allocated throughout the period, or do they just get put onto that very first period?
The taxes themselves?
Correct.
Okay, so taxes would go on the invoice, but taxes typically are not deferred. I mean, if you're invoicing, the taxes will go on each invoice as you create the invoice.
Mm-hmm.
You're not going to defer your taxes. I mean, the government wants that now, right? They're not going to let you defer it. So we're not deferring the taxes. We're simply deferring the actual revenue amount.
Perfect.
Okay.
That's the only unanswered question so far. So
okay. I do want to come back to one of the other questions since we're looking at them, Brian. There is a question about the software being deferred or not.
Mm-hmm.
Again, if you are a follower of the ASC 606 literature and you are in the software business, you can, I guess, be very happy because your revenue recognition is going to change. ASC 606 defines licenses as two different types. There's a right to access and a right to use. And
Mm-hmm.
software happens to fall into the category that says, you can recognize that revenue right away. So talk to your auditors, review ASC 606. If you were in the software business, you are going to find that the way that you recognize revenue on software is going to change. Okay?
Perfect. And yeah, just to underline that, like we can handle either method. So if you have a case where you're doing some subscription licenses that are say sold monthly, but you want to recognize them that period, that's fine. But if you also couple that with an annual maintenance contract where you're
Right.
billing it up front, obviously that needs to be deferred. So it's very flexible at the line item level.
Right. Okay, coming back to some of the setup here. On those deferral items, since we're talking about deferrals, we can come in and tell the system which items are deferrable items. And it's simply a matter of listing the items that you know would be deferrable. You could, if you wanted to simplify this, do it by group, you can simply throw all your items on here. Now, it's the next step that determines whether or not they actually get deferred. And that's where we come into the deferral templates. And we can tell the system, we're going to create the templates based on how we're going to recognize it. So for example, if I have a 1 year, I can say, recognize it monthly for 12 months, recognize it monthly for 24 months. Then I'm going to come back in and I'm going to come into the deferral defaults and tell the system where to apply, which items to apply, and which accounts to apply those deferral templates and parameters to. For example, on a sales order, my deferred revenue, I can tell it which accounts to use. If I have an item that has consumption or cost of goods, again, how that works. Then I come into the template and I say a particular item or group of items will be recognized based on certain parameters. So for example, in this one, my curricula is going to use an event-based template called shipment. This one's going to use one called exam, this one called vouchers. My other items, my dues, my enrollments, my discounts, warranties, are going to use straight line templates. So when I take those items and drop them on an invoice, for example, the setup fee, it knew automatically to defer that for 1 year. I didn't have to do anything else. It came here and said, yes, it's deferrable for 1 year. When I set up that consultation, it says, yes, I know it's deferrable based on the percentage of completion template. So all of this is automated, and it happens in the background when you put those items either on a contract or on an invoice. Okay, the only other piece I want to show you here is the deferral the event-based deferral templates, where we can come in again, we can create different templates with various amounts or percentages based on different milestones. There's the percentage of completion is just milestones, and we can add new milestones on the fly. Okay, so those are the three components. We've got the advanced recurring contract billing, we've got the advanced revenue expense deferrals, we've got the multi-element revenue allocation. I see a question that just popped up, and it's a great question, Debbie. I probably should have hit on that right at the beginning. The question is, what do you do with the difference between the invoiced price and the recalculated price? You know, what we do with that is we have to journalize it and put that on the balance sheet. It has to be held. It might be that you have billed your customer, I'll just make up some numbers, $15,000, but you're only allowed to recognize, because of the reallocation, maybe $12,000. Well, what do you do with the other three? You would then have to sit that on the balance sheet. You're accruing a deferred amount, and it sits on the balance sheet until, as you run through your invoices, the next few invoices would be the opposite. You may invoice your customer $1,000, but you can recognize $1,200, in which case we're going to grab a little bit out of that account so that by the end of the contract, you have both recognized and billed the same amount. We simply accrue it or hold it in a special deferral account that's defined in the multi-element revenue allocation module. Okay, so that's example one. Let's go back to the PowerPoint just for a minute. We get another example. What about an example where you tell a customer, you know, buy item A or A and B and get item C free? I mean, a BOGO, right? Buy one, get one. We all love that kind of a deal. I'm going to buy this item, I'm going to get that one free. You know, as a consumer, that's great. I love free stuff. As an accountant, I know nothing's free. Everything has to have revenue associated with it. You may not charge me for it, but on your books, there's a split there, especially if one of those items is deferred. Let's look at this example. I'm going to buy hardware from you for $10,000. You know it has a standalone selling price of $11,700. The software is $4,500, has a standalone selling price of $4,000. Now, it's billed one time, it's not deferred. It's an on-premise software, and the license type is a right to use. According to ASC 606, right to use licenses can be recognized up front. There's a setup fee, and even though you would normally charge $1,200 for that, that's the standalone selling price. I negotiated really hard with your sales guy, and he says, you know what, based on that, I'm going to give it to you for free. Of course, he made it up in the software, and I didn't know that, right? We can see that in the pricing, made it up in the hardware. But I'm getting that setup fee free. As a consumer, I'm excited. I'm getting something free. But it's billed one time, and it's deferred over 12 months. Again, the issues are, if I'm the person that's keying this in, I'm sitting there putting this into my Dynamics 365, I need to be ASC 606 compliant. So again, I've got this issue with where do I put these standalone selling prices? How do I allocate them? Well, that's exactly the same as what we already looked at. We don't need to go into all the detail on there. The answer is exactly the same. How do I allocate revenue to that free item? When I put that on an invoice and code it as 0, what happens? Again, without an application to do it for me, I've got to go out to Excel, key all these numbers in, write the formulas out, figure out what it's going to be, come back and manipulate the distributions and or the journal entries by hand to make sure I'm deferring something. I can't defer 0 for that setup fee. I have to defer something. And then how do I create that deferral? So what we want to do is look at sales order number 838. So let's go back into our environment here, and I'm going to go right into the receivables module. And if I go to sales orders, I've already got the sales order created, and here it is, number 838. I've got those 3 items. I'm going to come in here and say, here's my hardware, and if I scroll across, I can see it has a unit price of $10,000. I've got my software. It has a unit price of $4,500. My setup fee, if we scroll across under the unit price, it's zeroed out. Customer's not paying for that. So now I've got 2 of these items are deferred. Actually, that software, sorry, should be not deferred. There was a mistake there in my setup. I apologize. Again, a right to use license, I don't have to defer that under ASC 606. Under SOP 97-2, you would. So there is a difference, and that's going to change when you implement ASC 606. The setup fee is the one we're concerned about. It has a $0 sale price, but it does have a standalone selling price. Again, if we come back up to the revenue allocation, it says, I know what the unit prices are. I know what the standalone selling prices are. Therefore, I am going to reallocate the revenue, and it will defer $1,029.59. Again, it's taking the standalone selling price of the item, dividing it by the sum of all of the standalone selling prices, multiplying it by the contract value, which is the sum of this, $14,500, and it's arriving at $1,029.59. If we now go back to that, whoops, I wanted to go back one screen here. If I go back to that line item and I click on the advanced deferrals, we will find I have not yet run this invoice, so I can preview it, and I can see that in fact it is creating a deferral for something other than $0. And if you grab a calculator and add those up, it is in fact deferring the correct amount. So even though I'm not using, in this case, the advanced recurring contract billing, because this is not a recurring item, this is a one-time. And the reason I'm showing you this one is to show that even though I'm not using the recurring billing portion of the subscription billing suite, I do need deferrals. I do need the multi-element revenue allocation, which is allowing me to be ASC 606 compliant. So the modules, again, are designed to work together, but they're also designed to work independent of each other. So that's the two examples I wanted to talk about. Let's look at some reports. Now, running the reports in my demo environment are a little bit slow, so I've simply printed them out in advance. Here's the monthly recurring revenue report. Basically what it does, if we just kind of look down through, it shows me the beginning monthly recurring revenue for each period that I've selected. It shows me any new sales, so I can see any new contracts that I know about, anything that's going to start to be billed at that particular time. Anything that has a renewal. Anything that has been upgraded, it's changed or been downgraded. That could be a change in volume or a change in price, would show up here. Anything that has been terminated or the churn shows up. We've got some out here. And it shows me the ending MRR for each period, which of course becomes the beginning for the next period. We show it numerically, we show it all graphically as well. Now, if I want to drill in and get more detail, for example, I want to see what's going on in the month of July, if I click the header, that drills me inside the report where I can see each of my individual contracts in this column, and on the other side is showing me each of the individual categories, the beginning MRR, the new sales, the churn, the upgrades, downgrades, and so on. So I can see that. So that's the MRR, or the monthly recurring revenue report. The deferral balance report, this is one where I can come in and I can see all of my deferral schedules. I can see what was the original deferral amount. As of this date, what have I already recognized and what is the balance? Where this report is really cool is that when the auditors come in, the auditors never come in on the last day of your year, right? They always come in 3, 4, maybe 6 or 8 months later. So let's say the auditors come in 8 months later and say, and you've got an August 31st year end, just for the sake of argument. So they're now sitting there in February, say, on August 31st, you told me you had $30,906.91 in the deferral account on your balance sheet. Prove it. Well, you can go away and spend the next 3 days trying to rebuild the balance sheet as of X months ago, or you can come in and say, as of August 31st, click the button and it generates the report and says, as of that date, this is what it looked like. Your original balance was $34,469.92. We had already recognized $35,6301, leaving us $30,906.91 on the balance sheet. If I were to come up and change this to July, it would give me different numbers. The beginning would probably be the same, unless there's something new started in that period, but it'll adjust for whatever time period you need it to adjust for. The waterfall and declining balance reports, we're actually running this one from one window. We can choose either the recognition, which gives us the waterfall, or we can choose deferral, which gives us the declining balance. The waterfall report simply says between these two dates, and I can look at actual, forecasted, in other words, I haven't done it yet, or I can look at both. It says if you do your deferrals properly, this is how they will flow from the balance sheet. In this case, $7.64 will come out of my deferrals into my revenue. Next month, on that same schedule, $20.83 out of my deferrals into my revenue, and so on and so on. On the deferral balance side, it's the opposite. It's showing if I do my deferrals, what will be left on the balance sheet. And I can see that this amount is declining in the same amount that I would be recognizing on this report. What about future enhancements? What else have we got planned for the product? We've covered a lot of ground here, and I am going to come back and kind of run through some of these questions just to make sure we haven't missed anything. But a couple of pieces that we're adding a tiered pricing module. And so this will give you a couple options. You can do basic pricing, like 1 to 100 is a certain price, 101 to 200 is another price, but we've taken it one step further. One of our customers came back to us a while back and said, you know, we need cumulative tiers, where an example, 1 to 100 items is $1.50. 101 to 200 is $1.25. Everything over that is $1. If the customer orders 250 items, I want them to pay $1.50 for the first 100 items, $1.25 for the next 100 items, then they pay $50 or $1 for the next 50 items. So we're adding that functionality. We have that available today in Dynamics GP, so we're taking what we've learned from GP and bringing that over. We're also setting up a milestone billing module. So go back to one of your contracts. You're not going to bill in January, February, March. You may have a contract where the terms of the contract say you can bill the customer 10% of the entire contract upon signature, 20% upon installation, another 30% upon user acceptance testing, and the balance upon completion of training. How do you set that up in a billing schedule? How do you set that up inside of AX or D365? Well, today you don't. You would have to manage that out there somewhere in Excel or on a calendar or something. With our milestone billing module, we will be able to do that inside of the advanced recurring contract billing module. Again, we have that working for Dynamics GP. We know how to build it. We know what our customers are asking for, and we're bringing those in, and those should be released, if everything stays on schedule, by the end of August. We also are introducing minimum and maximum amounts, either by dollar amount or by numeric quantity. Think of that as committed amounts. So the customer says, you know, I'll pay you X dollars, and you say, great, but it's a minimum of X units or a maximum of X units for those dollars, or a minimum dollar amount, and you can use whatever number of items that you want. So those will be built in there, minimum and maximum by dollar amount or by quantity, and also free items. Again, let's come back to our cell phone plan. My cell phone plan gives me 300 minutes free. So I can build that on the schedule and say, you know, charge X cents or X dollars per item, but the first 300 items are free. We can do that either by a billing period or cumulatively over the life of the contract. Again, that will be released at the end of August. A combination of the ARED and ARC-B components. If I cancel a billing schedule in the middle of billing, my customer decides they don't want my services for some reason, maybe I don't want my customer. I mean, those things happen too, right? But for some reason, I have to cancel it midway through a contract, and I've already billed some of it. Not only will it cancel the billing, but it will go back and adjust, if I want it to, the corresponding deferral schedule. So I've got a 12-month schedule, 6 months in the customer cancels. I can create the refund for the remaining 6 months, and I can reverse and stop the deferral as well. So we're working on that now. That has a Q4 of this year release. It will be coming out before the end of the year. We've also gone one step further in our development and said, you know, we're working now in GP. We're working on Dynamics 365 for operations. That's what we've been looking at today, or the AX side. Microsoft has also announced and released Dynamics 365 Financials, which is the NAV or NAV product. Again, because of the way that we're developing and the code base that we're using, we are able to release everything that you saw today for AX will be released by the end of August for 365 financials and NAV as well. So if you have customers on that product or looking at that product, everything I've shown you today, of course the screens will look different, but the functionality will be the same as everything you just saw today. We also have an online customer portal where your customers can not only see their contracts and their billing schedules, but also pay their invoices. Today we have this working for Dynamics GP. We can release it very quickly for Dynamics AX or 365 and financials or NAV. It's simply a matter of us having a customer that requires it to make it happen. I do have, let me see if I can find it here very quickly, just an example of what it looks like. Here's just an example. You can put your logo or your customer's logo, put their name on here. So as a customer, when I log in, I'm going to see the logo and the name of the company I'm doing business with. I have the ability to come in here. I'm going to log in. It's going to ask me for an ID and a password, so I can only see my schedules. And when I come in, it says, hey, here's the person that's logged in. I can then come in and I can see my customer account, so I can update my address or my phone number if need be. Notice it's tied back to a Dynamics GP or a Dynamics AX, a Dynamics 365, ultimately a Dynamics NAV customer. Again, I can change the contact information. I can then come in and look at my invoices. I can see them there. Click on the pay button. I can see the invoice as it has been created in my financial system. Maybe it's been emailed to me, maybe it's not. It's just sitting there in the portal for me to come and look at. And I can come down, click the pay now button, and it will go through our portal out through your payment gateway. All of this is designed to integrate with Notice, which is one of the ISVs in the GP AX channel, and it will allow the customer to log in and pay their invoices either by credit card or by e-check using that Notice financial engine. The nice thing about that is it's fully PCI compliant. You're not storing credit card information. Your system is not subject to being hacked and having your customers' information exposed. That's all handled by the payment gateway. We're simply building the portal, the online web portal that your customers can use to see that. So coming back to my PowerPoint here, I do want to start going through some of the questions. Brian, I don't know if you've been reviewing those, and there's some here I should have a quick look at, but I do want to point out, before we do that, if you have more information, if you are an end user on the webinar today, talk to your VAR, your Dynamics 365 value-added reseller. They will have information for you. We actually just put an article, if you have the GP Optimizer magazine, if you get that, there's an article in there that talks about our GP suite. Certainly have a look at that. Contact us here at Binary Stream. There's my email address and phone number. You can contact me directly. Send an email to sales@binarystream.com. If you just want information, you don't want to talk to us at this point, you just want to see what's going on and get more information, go to our website, www.binarystream.com. Brian, over to you. Any questions there that we should have a look at?
Yeah, I'm just updating some of the ones that have previously been answered, but for ones that you can take a look at, Neil, the one from Paula, Debbie, actually basically the last few, but I'll address Todd's just off the top. Yes, all attendees, actually all registrants for this session today, whether you attended or not, are going to be receiving a recording that has both the audio and the slide deck. Neil, in the case of deferrals, I know certainly on the GP side of things with expenses, we look after both POP and AP. Is that also equivalent on the D365 side?
Okay, so the question is, which parts of the product do we actually create deferrals for? If I go into the deferrals module, notice under the deferral defaults, we have sales orders. That's where we spend our time today, looking at sales orders. But we also do purchasing. And again, I can set up on the purchasing side my deferral expense. I can set up the templates for deferrals there for basically my prepaids, general journals, free text invoices, invoice journals, and on the project module, we do deferrals of the project fee. AX D365 has some deferral functionality for all of the standard project bills. What it doesn't have is the project fees, so we have added project fees in here as well.
Okay, and how would you categorize the project accounting integration? Like you kind of addressed part of it there. Aside from the fees, is there any other things that people should know?
That is it. We're only touching the project fees at this point, and again, deferral revenue. So where am I going to recognize the revenue for those fees, and what templates am I going to use? But it's only for project fees. Could we integrate to more? Absolutely. I mean, our developers can integrate and do more beyond that. At this point in time, we have not had great demand for anything in the project module other than the fees. So that's all we have at this point.
Perfect. That I think wraps up all the questions. If you wanted to, do you have your email address on the PowerPoint, Neil?
Yep, hold on, Brian. There's just a couple more that just came in really quickly. Do you recognize costs to match the revenue? Again, if we come back over here, we can set up deferred revenue. We can set up deferred consumption. So you can set it up exactly the way you want it. And then when you apply the template, yes, the revenue and the COGS, or the consumption, the cost of goods sold, depending on what you call it as an accountant, here they call it consumption, would be recognized together over the same 12 months, 24 months, the same event-based recognition and so on.
Perfect.
Okay.
So yeah, if you wanted to share your email address up there, that's perfect. Reach out to Neil. If you work with one of the account managers like myself, you can let us know or give us a call. We'd be glad to address your questions or pass them along. As we mentioned, everyone's going to receive a copy of the today's session. If you do have any other colleagues that are also working with AX or D365 customers or prospects, please forward it to them internally. We want to increase the knowledge and awareness of this product as much as possible, as we believe it can add tremendous value to your practice and to your customers. So with that, I'm going to end it for today. Thanks very much for joining us, and have a great day.